The International Monetary Fund recently downgraded South Africa's growth forecast for the year to a mere 0.1%, down from its previous estimate of 0.7%. Yesterday, Reserve Bank Governor Lesetja also expressed concern over the weak outlook for the local economy, opting to keep the repo rate unchanged at 7%. Now, joining us to discuss the outlook for the South African economy is Christie Viljoen. He's an economist at KPMG, joining us from our Cape Town studios today. Christie, good to have you with us today. And as we know, lots was clearly said from the Reserve Bank Governor yesterday at the briefing following the MPC rates announcement. But what were some of the key takeaways for you?
The two important factors we look at with every MPC statement is the outlook for growth and the outlook for inflation. Now, where the IMF still had a little bit of hope for 0.1% growth this year, the Reserve Bank has said it sees no growth on average this year, which is really disappointing. In terms of inflation, the forecast that the Reserve Bank makes on which interest rate moves are based, those forecasts came down just a little bit, but really not enough for us to really be able to say that we've seen the end of interest rate increases.
Christie, do you still think we can avert a recession this year?
I hope so. Look, a recession is, if we need to go into the technical definition, it's 2 quarters of contraction in economic activity. Now, we saw that in the first quarter with a negative growth rate. However, the second quarter, we've seen some positive economic numbers in terms of retail sales, manufacturing and mining. And with that in mind, I think the second quarter, we could see some positive economic growth, which would in effect mean that we will be able to escape a technical recession. However, it's not something that we are really excited about in terms of actual positive growth numbers. Whatever we see that has a plus in front of it will still be very, very small.
If we do then manage to sidestep a recession, and as you've mentioned, the growth outlook still quite bleak, what does this mean then for ratings agencies and their view on South Africa?
I've got the view that we will still be seeing a downgrade at the end of the year. S&P is currently at the lowest possible investment grade rating. I think in December they will downgrade us to sub-investment grade. Now, a big factor there for them is economic growth. The rating agencies look at economic growth as an indicator for the government's ability to generate tax revenue. You need taxes in order to spend money, and if you don't have that, your deficit increases. And in the end, that's what the rating agencies are actually assessing. It's the government's ability to pay its bills. In South Africa's case, with the decline in economic forecasts over the past few months to a point where the Reserve Bank is saying it's seeing no growth this year, there's almost no reason to believe that we won't in December or maybe early next year see a downgrade in our rating. I think it's rather a question of when rather than if.
Well, the IMF recently addressed a number of structural issues that, could help the economy with its growth. Are there any short-term wins that you think we could focus on in the short term?
I think quite a few short-term wins we've already been able to secure. With a little bit of a recalculation on the fiscal budget side, we've made some gains. We've convinced the rating agencies to give us more time. We've also seen very, very few labor strikes this year, and I think there's been a lot of talk and a lot of communication between government and big business and labor to keep the strikes limited. So those are the small things that we've been able to do where we've been able to make easy gains. However, the IMF is more concerned with structural issues. These are factors that they've mentioned many times before. Their biggest concern is that South Africa is not creating enough jobs. And for that to improve, we need to have an improvement in the labor market situation. And for that to happen, we obviously need political will. So it's not an easy thing to achieve. If it was easy, we would have been doing it for many, many years now. Their biggest concern is that we are not creating enough full-time jobs, and we really need will from the very, very top of government to do that. And I think the IMF has said many times that it's not seeing that will to actually implement the changes needed.
Christie, listening to the Q&A session yesterday between our colleagues in the media together with the governor, the big question was, have we reached the end of the hiking cycle? He was very straightforward in saying all of this is quite data dependent, but your view as an economist, do you think that the MPC will continue on its rate hiking cycle as aggressively as it started off this year?
I I think we will probably still see a little bit of an increase, definitely not as aggressive as we've seen this year. And I'm actually hoping that we don't see any further increases. I think that the rand has been doing a little bit better the past 2 months. I think that the outlook for rainfall in the next year has improved. And these two factors specifically should be able to help us limit the inflation rate in the next 12 months. The Reserve Bank has made a small reduction in its inflation forecast for the next 12 months, and I'm hoping that within the next 2 and 4 months when they meet again, they'll be able to further moderate those inflation forecasts and actually decide that they have actually done enough to continue with their mandate of pursuing price stability by trying to get inflation back within that 3 to 6% target band.
Christie, what about the impact of a rate hold on consumers?
Well, it's obviously good news. Consumers, and specifically people with debt, those with mortgages and other kinds of debt, it's been a tough past 12 to 18 months with interest rates rising. However, even if we are able to just for a short time stop the interest rates, most analysts expect interest rates to continue rising later this year, maybe even beginning of next year. So that obviously means that nobody can really relax now. It's not a situation of things are really going to get better from now on. We are at best at a situation where we are on pause, as the Reserve Bank governor said. There could be more bad news in the future.
Christie, if you were an international investor, how would you be reading the analysis and movements of the SARB from its most recent meeting? Would you be quite confident in the policy as well as stance of Treasury?
I think from a monetary policy perspective, international investors have always been quite confident in what the Reserve Bank is doing. From a fiscal perspective, in terms of government finances, the weak outlook for economic growth is not a positive for them. Within the next few months, the finance minister will have to work on the medium-term budget that comes out in October. He's going to have a very, very difficult job in making sure that all his numbers look good, because when the rating agencies come visit in November and when they make known their decisions in December, this is really, it's soon. It's very soon. The finance minister doesn't have a lot of time, so I would definitely not be wanting to have his job at this stage.
What about the impact of global factors? For example, we've just had the Brexit decision come out and the US Fed rate. How can we take into consideration the impact that will have?
At this stage, the main global factors that will impact South Africa or is being talked about as a potential impact, the one is the Chinese economy, which is showing slower growth. They are, of course, a big buyer of our exports. The situation with the United Kingdom is a bit difficult. They haven't officially started their exit process from the European Union yet. So that means they've got at least another 2 years before that officially starts. The concern is that the United Kingdom is a big investor in South Africa as well as a big trade partner. And at the moment, our biggest problem is that we just don't know what the outcome is going to be, what trade agreements will look like, how we will have to maybe renegotiate certain trade and investment agreements once the United Kingdom has left the European Union. So that is our biggest problem. We just don't know at this stage.
In the short term, that should be a bit of a positive for emerging markets like South Africa. Are you expecting to see increased flows into our fixed income as well as bond market space?
Yes, we've already seen that. The rand has improved significantly over the past month since we've seen the Brexit vote. As far as I know, it's about 10% stronger against the US dollar compared to 2 months ago, and significantly stronger against the pound. Because of the situation in Europe, there's uncertainty about all kinds of policy, all kinds of economic indicators, economic growth, production, those factors. Investors are moving their money into emerging markets like South Africa, into stock markets, into bond markets. So that's a positive. It might be short-lived. If we get in the near term any more certainty about what exactly is going to happen around Brexit, it might be that money goes back into Europe and Great Britain. But the problem is that the timing. We just don't know. There's quite a shambles in terms of UK politics. They've now chosen a new Prime Minister, but policy still needs to be set. Some big appointments still need to be made. So we are sitting with a situation where we just don't have a time frame on all of these issues.
Christie, thank you so much for your insightful analysis and reaction to the MPC meeting yesterday. That was Christie Viljoen, economist at KPMG.